super excited about the fact that Arkefi is launched yesterday. Really looking forward to go beyond art because there is so much more, right? Can you maybe briefly expand on that? What's more possible than art, and what kind of challenges have you faced with bringing art on the blockchain, and what kind of challenges do you think we could face with other assets like luxury goods, cars, as you mentioned? Because I think this is why the collaboration that we have is so important. I always believed in a use case like this. But if you don't have the expertise in specific industries, like the art industry in this case, it will never be successful. What I've seen from what you guys are doing, there is so much that comes to play to do it well. I'd love to hear a little bit more about what it entails to bring this asset on chain, and how you manage to keep it secure and reliable for the investors or the buyers.
Sure, thank you, Matthijs. If I should start by a couple of challenges, I think if we take a step back from the art piece and then just look at the collectors, first of all, the collectors is often 50 years plus, right? And they have a need for liquidity. So you need to get, first of all, a collector which is not tech savvy onto Web3. And this is actually already where the first kind of obstacles occur, because it's a new territory. A lot of younger people, they're very familiar with Web3, but the average age is, let's say, slightly younger than 50 plus. So already there, it's kind of an obstacle. We have to educate both on investor side, but especially also on the collector side, to be engaged with a platform where basically everything happens on chain. But there's also a lot of other aspects when it comes, of course, to the art piece. As you just mentioned, you need to take a physical possession of those art pieces. So what we have embedded as a process is that we will always take possession of the art piece within free ports or bonded warehouses, because essentially they are more safe than a bank is. It's heavily guarded. It's very limited access that you can get there, and it's most secure facility there is. There's even so much art locked up in a free port in Geneva that the insurance company almost cannot insure more art or collectibles or cars or whatever there, because there's so much value in one place. So from a risk perspective, if something were to happen, which have not really done in the time of history, they really have to allocate it through other locations around the world. So this is a very interesting aspect. But when it comes to the art piece and the entire due diligence aspect, there has historically always been difficulties, because when you're trading with an art piece over an auction house, as an example, what the auction houses normally do in case an art piece is not being sold, they're going to remove this result immediately. And that means that nobody can really see whether it actually sold or not. And when an art piece do not sell on auction, it normally dilutes quite substantially in value. So it's a very important information that one would need to have. So already having a connection to a blockchain where everything is visible, it already creates a more sustainable and efficient market. So the use of blockchain in general for just tokenization is very important, because you do actually have full transparency of the entire transaction, which is not really how it is today. And this is something you have to educate also the collectors around, because you have to imagine this is an industry where basically collectors, they're used to having these off the grid deal, private trades and so on. And now all of a sudden we were aiming to make this public, because at the end of the day, it benefits every participant. It benefits if we do due diligence of a particular art piece, we put in a specific number, an ID for this very object, we can then track that over time. How funny it may even sound today, you don't even have a register of an art piece. The only thing you have, let's say for whatever Picasso or Modigliani, you have a catalogue raisonné. And in the catalogue raisonné, you can then refer to this particular piece, but it does not have any unique ID. So that's already a major issue in the art world, and that's something that both tokenization and blockchain will be able to solve. But maybe I can pass it on to Luke. What kind of opportunities and challenges at the same time there is from an institutional side of things?
Yeah, I think you touched on a few really important points there. And the way I'm kind of thinking about it is there's a couple things that are going on concurrently that we kind of need to do to grow this space and to actually, start to see real usage taking place on blockchain rails. And I mean, it's kind of no secret that one of the biggest things that we're undertaking here is a massive education effort to actually bring institutional capital and people in leadership roles at these firms and in these seats who are the decision makers, bring them up to speed on what the technology is, how it works, and how it can be impactful for their businesses. To take the traditional finance world as an example, post 2008, you've seen a ton of consolidation in the finance industry. And, that's really on the back of regulation, right? As your fixed cost goes up, the big fish kind of eat the small fish, firms get larger, and it becomes a game of scale. So to the extent that we can educate financial institutions on very specific areas where tokenization and on-chain finance can, really just improve their margins and lower costs at scale, that's very impactful for them. Because, at this stage, obviously, this is a very mature industry. There's not really a ton that financial institutions can do in the world today to improve their margins. And it's a very competitive, cutthroat business, right? So there's tons of competition, and it really is a game of scale. To the extent that you can bring in this new technology and say, hey, we're going to cut out all of these inefficiencies that are holding back, your profit margins, that's typically a good way to get a conversation started. At the same time, on the consumer side and for more consumer-facing products, I think it's really important to be able to create smooth and seamless user interfaces and user experiences. So we really need to be thoughtful about how we're onboarding new users to blockchains and bringing Web 2-like experiences onto these Web 3 rails and removing a lot of the pain points that have kept crypto applications from, moving to millions of users concurrently. So I think there's two sides of the table from that standpoint. Another really interesting thing, Mads, that you kind of touched upon and is a way that I think about this space is there's a couple different types of assets that people are trying to bring on chain. So you have physical assets, which presents a whole different set of problems and opportunities. In this case, the collectibles and art and real estate, these are all physical assets. And you have to think about those very differently than you would financial assets, say stocks and bonds. So those are just a couple things that I think about and I think present interesting points of discussion.
Yeah, if I just may I just add something, Matthijs, real quick. I think it's also worth to mention why this is such an interesting space, especially for the art. So imagine that you have, let's say, a Modigliani worth 150 million, or even a work by Da Vinci, Salvador Mundi, 450 million, right? The problem today is really that if you reach these extensive amount of valuable art pieces, it becomes very, very difficult to find a buyer. You have to imagine there's only from the really ultra high net worth individuals, there's only a handful of buyers who then are collectors also. And then from that handful, there's maybe only one or two who actually have the liquidity available to buy such an expensive art piece. But then you also have to find that very individual who then likes this particular Modigliani, because it's not just one piece in the 100 millions, right? There's a couple of pieces there. So it's very, very inefficient market prior to tokenization. And I think this is not something that will happen over a day, for sure not, but it will happen with time, because this is the best way to trade these type of objects, because there is not so many single buyers for these objects. And I think that's why it makes sense to start with art, collectibles, cars, or whatever, because you can really financialize those products as well. Because as you mentioned, Luke, if you go into bonds or stocks or whatever, it is a very competitive market, right? But if you look into non-bankable assets such as art financing or car financing, as of investment car financing or collectible, there's basically nothing existing, right? So you can actually solve a need with these NBAs, so to say, and it has a huge potential because nobody's in this space, and that's why I think embedding tokenization in a financial way creates unique opportunities to be on the forefront. Yeah.
I have to say, guys, I love both of your point of views. This is amazing, and it's really cool. I think also for the audience to hear how blockchain technology can help traditional industries to be more efficient and be more inclusive. It shows that we do have a mature industry that is ready for use cases with real world impact, and I think this is really important. If you see in especially the last 1.5 year, with a couple of black swan events around unsustainable yield products that have collapsed entire constellations of projects working together or being intertwined with each other in very opaque matters. We have here something when we speak about tokenization of real world assets. We speak about something tangible. We speak about something that results in something that is sustainable. And this is something that is really important. It's what this industry needs. We don't need another meme token or another Terra Luna kind of environment. We need something that is sustainable and will help mature the space even further. So I'm very happy to hear that we don't enrich just DeFi or the blockchain industry, but we also make more efficient the traditional industries. It's very, very cool to hear that and to hear why also. And look, can you maybe tell a little bit from the Avalanche perspective, why is tokenization of real world assets such an important value of the Avalanche ecosystem? And maybe also personal question to you: what kind of asset would you really look forward to see tokenized? What kind of real world asset?
Yeah, both great questions, and I love how you just laid that out as well. That it's really exciting to see some of these more real world and real utility use cases coming to the fore now. And it's cool because I think in a lot of ways it's actually the blessing of the bear market and the downturn in the cycle that's kind of enabled this, right? You brought a lot of innovation to this space in 2020 with DeFi Summer, and in 2021 the market was just incredibly frothy, and you saw a lot of this speculative activity, which is great, and I think it's both a feature and a bug of this space. And then you kind of saw the hangover, so to speak, in 2022. At the time I was onboarding a lot of institutions into the space. There was a lot of institutions and large names who timed the market quite poorly from a crypto asset perspective. And perhaps they put a lot of initiatives that they had around blockchains and around public blockchains on pause. But you've had a lot of education that's been done throughout that multi-year period, and I don't think you can really understate that. So the knowledge and understanding of what the actual benefits are of doing things on public blockchain rails from an efficiency standpoint, transparency standpoint, interoperability and utility standpoint, the benefits of having an open source developer community, and all of these kinds of things are not lost on essentially every large financial institution that we speak to at this point. We don't convince anyone from the traditional finance world to pursue blockchain initiatives or use blockchain in any way. There's no convincing that really needs to be done at this point. It's kind of you're not going to be competitive, and you're not going to be able to survive if you're not taking this seriously. And from an Avalab standpoint, the roots of our firm and really of the Avalanche network had this idea of tokenization and digitization of the world's assets as the North Star that's been guiding us since inception. that was laid out in our founder, Dr. Emengud Sears' thread that he posted on the day of the network's launch with specific, goalposts around the tokenization of off-chain assets. We have a large contingent of the Avalabs team that comes from this traditional Wall Street background. So it's very much something that we see as carrying the future forward for us, in addition to everything that we have on the crypto native side and on the Web3 gaming side. So it's something where, with the initiatives we have, like Vista, for instance, which is a $50 million purchase program from the Avalanche Foundation to allocate towards the actual tokenized assets themselves, and not necessarily just providing grants or venture funding to early stage projects, but actually buying assets that are being tokenized today, and kind of putting our money where our mouth is in that way. I think speaks volumes beyond just what we are saying publicly, what we're actually doing in this space to really support projects and high quality builders and help them find those distribution channels and find demand in the market so that they can bootstrap liquidity even in a difficult environment, right? So we see more and more institutional capital coming on chain over a multi-year time horizon, but these sales cycles are quite lengthy, and today it's a difficult liquidity environment, particularly for assets that are not native to blockchains. But if you're able to be really thoughtful about where you're going to find those buyers, where you're going to find those lenders, LPs, whatever it be, based on the structure of your project, and you're able to bring new money onto blockchains and new users onto blockchains, we think that's, number one, just very powerful and sets you up to be successful. But number two, as we move into a more constructive environment over time, it's just going to present a real opportunity for what sets up to be a massive shift of value that's being transacted in the global economy, moving off of legacy rails that have been frankly aging for several decades now. So we're due for a tech upgrade to capital markets on the back end, and we think that this is the clear path to doing so.
I love how you also more or less mentioned that the traditional or the financial institutions, they don't need convincing. It's like it's like a logical next step, and in a way, it's like this. Like everything that we're working on, that we believe in, the North Stars. You put it so nicely. It is actually, if you think about it, it is actually very logical. It's a very logical next step what we are doing, and tokenization of real world assets. It's almost common sense. Like it's the best next step in order to improve both sides of each industry. And what you also said earlier, Luke, what was actually really important and often overlooked is the usability of a platform that deals with tokenized real world assets. So I think right now, if we want to be ready for the next wave of adoption, we still have a lot of room for growth in order to make sure that these new users will know how to use those platforms, and that they don't have to worry about a private key or a seed phrase and how a transaction works. Like ideally, you want all those kind of things more hidden on the background, right? You want to have best user experience for those that don't really want to hear that it's blockchain or a transaction or a MetaMask or whatever. They just want to make sure that they can participate in something that is low barrier, that's accessible, but it's transparent, and they don't understand why, but they know that this asset is secure and it's traceable. And I think this is really important to remember, that when we keep building, that we keep this thought and also that North Star, if I can also mention it like this, in mind. What's your thoughts on this, Matt?
Yeah, I think it's also about the diversified portfolio, so to say, because today money costs a lot more than it did in the past, and it's very difficult to find, as Luke also mentions, a very competitive landscape already on the financial market. So bringing new projects on chain, which is already not possible in the everyday life, is a super important element for any type of investor. At the same time, I think really what is needed in the industry is just simplifying the entire process. If I right now were to onboard one of my companies to let's say an exchange or whatever, the process is ridiculous. It takes me several of months. They keep requesting stuff. It's just very complex, right? And this is maybe also from the institutional side, because many platforms today only allows users to be onboarded as a private individual. So the entire space is not really adapted yet for the institutionalized side of things. But you also have the entire accounting firms, which are very uncomfortable with the entire situation. So it's a learning curve across different sectors when one company wishes to enter the blockchain space. And this is really where I see it will happen with time, because we are going in the right direction. But it's still, there's a lot of things that needs to be simplified because the technology is there.
Yeah, 100%, man. And maybe Matt, to come back to the Arkefi platform and the listing of the first asset. Can you maybe briefly describe, like, how as a user can you register? What do you need in order to be able to participate in that platform? And what are the steps in the process from start to beginning? And what are the possible kind of outcomes after you've bought a fraction of this art piece?
Sure. I mean, it's actually, we wanted to make it as simple as possible. We didn't want to have too much noise on the platform. I know you can do a lot of more on the front of visualizing things, but what we wanted to do is just really to keep it to the basic. So if you go into arkefi.com, you can sign up with a user. You will then just have to verify your email. Once your email is verified, it's a simple KYC process. So once that has been approved, you simply connect your wallet, and from your wallet you have the ability to buy a fraction from 100 USDC. And then basically there's a 1 month funding period, and if the entire piece get fully funded, there will be a 2-month duration for a buyback option. Now what will happen in these 2 months time is either the collector, he will repurchase the art piece, which will result in a 4% return to the investors, or he will not repurchase the art piece and the investors will get upwards to 50% performance, which is in my opinion unheard of, because it's secured by the art piece. But how is this possible? It's possible because we want to outbeat all the secondary lenders. And so this is not a loan, it's an option. And that's very important because lending causes a lot of regulatory challenges across countries. So this will very much complicate things, and it will also have to be classified as a security. So since we're doing an acquisition option, that basically means that investors, they are the owner of the art piece in the moment that they buy a fraction. But in the smart contract, there is an option for the seller to exercise within these 2-month period. And if you don't exercise as well, then you have the full upside potential. So I think this is a new way to bring liquidity to the collectors, but make it a super sexy opportunity for the investors at the same time. And this is really where I see the uniqueness of our offering. But we have a lot of more things on the roadmap. We also want to embed Arkefi Academy in such a way that we basically can educate the users around the art world. We have terms in there like sale through rate, and for some people they maybe do not know what is a sale through rate, right? But if you come from art or collectibles, you're very familiar with the sale through rate, because this is basically the percentage of pieces which are sold when they hit a public auction. So the higher the sale through rate, the lower the risk essentially are. And this is this is quite interesting because we are combining it not only with what you see on Arkefi, but also what we have in the main company, which is access to data. And with this data, we can basically make it more investable, more transparent, because we have all this data at hand. So yeah, I hope that kind of clarifies some of the processes, Matthijs.
Absolutely. Thank you so much. And I invite everyone to check out the arkefi.com platform for sure. Another thing that is often overlooked in these kind of use cases, or in this space in general, although less and less, is compliance. And of course, with Nexera ID, we overcome the struggles with staying compliant by allowing users to do KYC in a way that they own this KYC verification data themselves. They encrypt it locally and then decide themselves with whom to share this data. And they can do this also as zero knowledge proofs, as deployed and verifiable credentials, so that they don't have to share their personal data necessarily with protocols that integrate like this. This means that completely anonymously you can interact with the protocol while the protocol that you interact with can trust on the fact that you adhere to a specific set of rules, like above 18, you're within the EU, etc. Now, this is, of course, from a technical perspective, is kind of cool, but I'm also interested from you guys' perspective, from how much your knowledge allows you. What's your idea of where we're heading with the industry, specifically to DeFi or the tokenization of real world assets in the field of compliance in the next years? Or where do you hope that we go? Do you maybe see something more with regards to self-regulation, or do you have some interesting anecdotal information from specific jurisdictions? Love to hear maybe from you, Luke. You have anything in this area?
Yeah, absolutely. And from what we have kind of been working on here at Ava Labs, so there's two big differentiators for Avalanche as a network in terms of the public blockchain architecture. Number one being Avalanche Consensus, which powers the network and is the third ever novel consensus in all of cryptography behind Nakamoto and Classical. And that just enables us to scale our validator set beyond what would be otherwise possible, right? So if you think about the blockchain trilemma of security, scalability, and decentralization, Avalanche Consensus is really what allows us to scale that validator set to be decentralized while also, keeping that performance and that security with sub-second finality and really high throughput. The TPS that we're starting to get on experimental VMs built on Avalanche, such as this Hyper SDK and Hyper VM that our engineering team is working on, is pretty insane. So I would encourage anyone who's interested to look into that. But the second big differentiator for Avalanche versus other blockchains out there is subnets. So subnets are essentially the horizontal scaling solution for Avalanche. They are effectively just application-specific blockchains that can be spun up quite easily and in a quite cost-efficient manner. So for financial services in particular, and I'll just speak to this because I think it's relevant across the board, we have a productized version of a subnet called Avalanche Evergreen. So what an Avalanche Evergreen subnet is essentially your own layer one that's EVM compatible, that has permissioning. Sorry, I cut out for a second, I think. Can you guys still hear me?
Yeah. Cool. Yeah.
Cool. So an Evergreen subnet has permissioning built in at the user level. So there's KYC built into the chain that manages an allow list for user wallets to interact with this environment. But there's also permissioning at the validator level, which financial institutions care quite a lot about in terms of who's actually, has access and visibility and is validating transactions. And there's a number of customizations that can be done across the architecture of a subnet to ensure that for whatever regulatory jurisdiction you're in, you're going to be compliant, right? So another interesting point about these is that you have the ability to do a custom gas token. So a lot of financial institutions, based on their jurisdiction, can't actually custody crypto on their balance sheet. So we would perhaps need to do a tokenized deposit that they could use as a gas token, or even a valueless gas token, or a stable coin, or their own custom token, right? So those are the kind of things that we're enabling on an evergreen subnet. And the way that we kind of see this enabling the future of on-chain finance, as we like to call it, which is really just tokenized assets being used on DeFi rails. It's really quite evident with our Spruce testnet initiative, which is a consortium of ultra-large financial institutions, including T. Rowe Price, Wellington Management, both of which are $1 trillion asset managers, others such as Wisdom Tree, Cumberland DRW, a number of other institutions of this caliber that are not public today, but essentially using the evergreen subnet environment as a testing ground for tokenized asset transactions on blue chip DeFi rails. So what does that actually mean? We have, Aave, Uniswap, Trader Joe Liquidity Book, Volts, which is an interest rate swap protocol, all of these DeFi dApps deployed onto the Spruce testnet. And what's interesting is there's no crypto assets that are actually being traded or transacted with in this environment. It's all different types of stable coins, tokenized commodities, tokenized art and collectibles you could use as collateral on Aave to borrow against at a floating rate. You could take that floating rate loan, swap it for a fixed rate on Volts. You could use that fixed rate loan that you've now locked in to trade productively or LP into one of the DEXs. And you're starting to see an environment in which DeFi is integrated quite nicely with real world assets in a compliant manner due to the ability for subnets to really bridge liquidity and onboard institutions to the EVM and to DeFi more broadly. So I think that's kind of the vision for us. And I'm curious what you guys think about that.
Yeah, man. So first of all, thank you so much for your extensive answer. And really, the Avalanche subnet is quite cool because we passed the DAO vote. I think around a month or 2 months ago, around building a subnet dedicated for our data tunnel protocol. And we are building it as we speak. So very exciting. Hopefully we can release an update about it in the next 2 weeks, maybe already. And maybe now that you've gathered an audience interested in this, Luke, when we speak about subnets, we all know the hype around L2s of Ethereum. Like, could you maybe explain to people what is the difference between a layer 2 of Ethereum networks and the Avalanche subnets?
Yeah, sure. So for, in particular, financial services, true time to finality is something that's really important. And when you think about an Avalanche subnet where you're basically inheriting that true sub-second finality on transactions and can have confidence transacting in this environment that that's not going to be reversed or your transaction is going to be left out of the block as it's posted back to mainnet if you're on a roll-up, for instance. That's something that is quite important from a just confidence and ability to transact perspective. I would also say L2s today are incredibly centralized in terms of the way that they're operating via centralized sequencers. So for really people who are, serious about this concept of decentralization, you can scale your validator set up to as many validators as there are on the Avalanche primary network with the subnet. So right there, you have kind of your performance and your scalability and your decentralization out of the box in, ways that I don't think are necessarily proven to be true yet on L2s. I would also just mention from a ease of use perspective, we have a full offering here called Ava Cloud and a full team within Ava Labs called the Ava Studios team that basically does no code blockchain as a service for subnets. So everything from the build out to the ongoing management of the subnet itself, validators, RPC endpoints, block explorer, everything that you would need to build out and deploy your own custom application specific blockchain, we can essentially do for you. And this is something that's been super appealing to enterprises and institutions who, in the past, they would have to do this on a private enterprise blockchain, and it would cost them, maybe $1 or $2 million, take 1 or 2 years to actually build this out. With the Ava Cloud offering, they can do that at a fraction of the cost and of the time to market. So it's a 10x to 50x improvement there in terms of the ability to actually build these things out. Much more difficult, I would say, to build out your own Cosmos app chain or your own L2. But it's a fair debate, and it's certainly one that we're quite interested in right now.
I love the answer, man. Very informative and educational, and really cool to hear. And I think this underlines and perfectly explains why we've chosen to deploy the Arkefi platform on Avalanche. And I must say, speaking for the development team, it was quite pleasant to work and deploy on Avalanche. So definitely can underline that. And so we are nearing the end of this space. Mats, for everyone still listening here, thank you so much, by the way, guys, for still being here and joining us in the first place. Really amazing. Mats, for everyone here, what's next for the Arkefi platform? What can we expect in the next few months on updates, if you plan any, and what does the future hold in general for the Arkefi platform?
Yeah, just I want to circle real quick back to what you guys spoke about regarding regulatories, because it's a very important element. When it comes to, I'm only speaking for art and collectibles, because when you come to this subject, it's very important that there's the right knowledge in the company, because everybody could essentially place an art piece or whatever on chain. That's not really the big deal. The big deal is going through the actual due diligence process, the valuation, knowing the right and wrong, because how the world is today on the art side is basically is that not every appraiser would stand behind their own appraisal. So you can have a company popping up doing tokenization all of a sudden, but they don't really have anything to share at all, because nobody wants to stand behind the valuation, not even the company themselves, right? And this is what we are doing. We will happily stand behind a valuation, as we do in this case, or when we have it from a third party, this will be a third party that will be visible, because it's very important that whomever is giving a valuation and confirmation of due diligence actually stand behind those products essentially. So when it comes to the regulatory side, I think it's very important, at least for art and collectibles, that there is some kind of self-regulatory aspect that has to be fulfilled, because other way around, everybody can just say, hey, I'm an art expert, right? Because today there is not really anything, but that doesn't really change if it's on-chain or off-chain, but it just have a wider reach when it's on-chain. So therefore, I really think that this should be some kind of self-regulatory space where you have to adapt to certain things. Now, circling back to your question, what do we have up next for Arkefi? We have, first of all, the Arkefi Academy, where we would like to educate the users a bit more around the entire art scene. We have right now in a larger negotiation regarding giving a very large amount of guaranteed investment opportunities directly onto our platform. And then we also have new asset classes coming in soon. We had actually last week more than 15 million worth of requests for financing for cars. I believe a lot of people is very interested in seeing car financing on the platform. So this is something that is very close to us. But one of the major things, I cannot say exactly when that will come, but that would basically be to trade the options, because at some point, if an investor is locking in an investment over a year and would like to trade that option at some point in time, it would make a lot of sense that we gave them this ability. So this is some of the things that we have on the roadmap for the future.
Yeah, amazing, man. I'm personally looking forward to tokenized classic or exclusive cars, hypercars. I would really love to hope to own at least a fraction of that in the future. So at least I can say I own a bit of a hypercar. But yeah, really looking forward to that. I fully agree with you with regards to self-regulation. A while ago, we also had a space. I believe that was also together with Avalabs around compliance and regulatory frameworks and how self-regulation can help our industry from even strict regulations that we cannot avoid if we keep going forward, not self-regulating. And it's interesting to see the kind of similarities between the art industry, which exists thousands and thousands of times longer than our blockchain, young blockchain industry, and we face still the same kind of issues. I hope we solve them a little bit faster in the decentralized space than the art space, but yeah, it's very interesting. So thank you so much, guys, for both your point of views today. I definitely learned some new things, and I hope it was worldwide to everyone tuning in today. Luke, any last words before we head off?
No, thanks so much for having me. This was a real fun chat, and I'm always happy to learn more about the art world because I'm a bit of a novice there. So hearing a bit from Mats was awesome. So thanks for having me.
100% totally agree. Thank you so much, guys. Thank you, Luke. Thank you, Mats. And well, hope to do this again sometime in the future with you guys.